Thank you very much, Raleigh. Thank you. All right, so I'm just going to do another audio test real quick. Can you hear me? Yes, on the audio, just A for audio would be perfect. Great. All right, so what about these moves lately we've been having? They're insane, right? I mean, just crazy. Did anybody catch the move in bonds? I caught parts of it. I didn't catch all of it. I caught like 2.5 points of it and then another half a point. So out of 5 points, I got almost 3 full points in it. Crazy. I mean, the market is just nuts right now, right? So I'm going to switch over to the desktop sharing, and you should be able to see a slide. Do you see a slide that says how to find better trades with volume analysis? Do you see that? That's perfect. Now, I use this little draw thingy tool thingy, and I don't even know how you pronounce it. It's Wacom or Wacom, WACOM. Anyway, it helps me draw on the board, and I just need to make sure that that thing's working. So I'm going to draw on the slide here, if you will. Oh, see, look at there. It's not working right, so I got to make sure I do it the correct way. Think, and then pin. There we go. So answer me this question right here. What is the answer to the question that I'm drawing on the board? Perfect. All right, that means this thing's working, and it means I've got all the buttons pressed the correct way. So we are set. So welcome to this webinar on how to find better trades with volume analysis. At the end of the presentation, 1736, that's hilarious. At the end of the presentation, we're going to do a lot of live charts, and I'm actually going to do some trades for you too if we can find some. We'll probably be able to do, well, I mean, gold's open, bonds are open. We'll be able to find at least a trade or two at the end of this webinar, since it's after the market closes. A lot of the markets open back up at 6 o'clock, so we'll be able to do a couple of those trades. All right. So I have to read you a warning. I'm not going to read this word for word, but I am a Series 3 and a Series 30, which means I had to take this pain in the rear end test, and I did not pass it the first couple times. The third time I took it, I passed it. I had to get a 70 on it. Not a big math guy. I'm dyslexic. So Lord of mercy, if I can do this stuff, y'all ought to be able to do it. But I have to actually scare you first. CFTC Rule 4.41, hypothetical or simulated performance. What this basically means is never trade with more money than you can afford to lose. And some of the stuff that I'm going to be showing you is cherry-picked examples. And what that means is I had to find really, really good, perfect examples to teach you the theory part. And then I'll show you what it looks like on live charts. And then I'll show you like, all right, this is what you could have done. This is what you would have probably actually done, okay? And we'll do some analysis there at the end, and I'll take as many questions as I can get through. And then when we're done, we'll take off, and then we'll go spend some time with our families, and we'll trade again tonight and first thing tomorrow, right? So let's take a look at trading. I have to, everybody just give me a visual yes in the chat box if you understand how dangerous trading actually is. You could potentially lose more money than you have in your account. I like to freak people out and go, look, trading's probably going to end up like a bad country song. Your wife's going to leave you. Your kids are going to hate you. Your dog dies, and they come and repossess your vehicle and your home. So I think I've done a sufficient job of scaring you a little bit. So now let me build you back up and give you a little bit of hope. My name is Hubert Senters. Yes, that's my real name. I have no idea why my grandfather changed it from CENTERS to SENTERS. I think one night he just was drinking too much and said, you know what, we're just going to change the C to an S. All right. I'm pretty much known in the industry for my no BS approach to trading and investing. I'm known as a straight shooter. Sometimes that gets me in trouble with different brokerage firms and exchanges because I pretty much tell people what I think with no filter. And a lot of times it will just get me in a little hot water. All right, so what I actually believe is if you get around other driven, successful, wealthy, just people that really are just charging after their goals, some of that will rub off on you, okay? So in this slide, all I'm showing you is if a redneck, and that's this would be me. This would be the guy with the redneck. Here, this redneck has 4 necks. 1, 2, 3. It's 4 rednecks there. That's impressive. So if I can do this, you should also be able to do this. Okay. This is a picture of Paula Abdul. I'm in a mastermind with her. I've done some work with Richard Branson, his foundation. I'm actually standing up at my stand-up desk right now as I'm talking to you. I do not have this little monkey suit on, unfortunately. Actually, fortunately, I never wear these things. I'm in front of this microphone talking to you right now in front of 6 24-inch LCDs on this PC. This is my main trading PC. And yeah, this is the Shark Tank guy. And he's actually mean. He's not very nice. That's why they call him Mr. Wonderful. He's not terrible. It's just he's not really, really nice either. And then this is, you guys probably know this guy, Dave Ramsey, and I actually just got a call from his office yesterday. They're wanting me to come down and do some work with those guys. So, like I said, if a poor Kentucky redneck from Kentucky can do this, right, you ought to be able to pull it off too. It's very, very counterintuitive though, okay? So you have to do some things that you really don't think that you should have to do. It's not like buy this, hold this, and everything kumbaya, right? So let's go through a couple of things. Before we dig into volume analysis and how it really works, I'm going to tell you the story of the pot roasts. How many people have heard the story of the pot roast? So my wife's name is Lisa. I've been married to her for 21 or 22 years. Anyway, it's a long time, right? So I'm going to do it with the name, and here's how it's going to go. So Lisa is fixing supper or dinner, depending on where you're at. And what she's doing is she's fixing a pot roast. And her friend is over, and her friend's name is Angie. And what they do is they've got this pot roast, and they're putting in some onions, some celery, some carrots, some salt, some pepper. And before they put it in the pan, Lisa cuts off the ends of the pot roast, puts the pot roast into the pan, and then we'll call this the oven. Okay. And then she places the pot roast in the pan in the oven, and then just lets it sit there, and then it gets done, right? So Angie, so hit Lisa and Angie with a big A. Angie, you're talking. And Angie goes, "Why did you cut the ends off of the pot roast? Won't that make it more dry instead of moist?" And Lisa goes, "I don't know. That's how my mom taught me how to make pot roast." And she goes, "Okay." So the next time Lisa and her mom get together, her mom's name is Jewel. It's a weird name, but we're in the country, so we'll go with it. And Jewel tells Lisa, like, "Well, that's how Grandma taught me how to do it." So they both of them, go over to Great Grandma's house, right? And Great Grandma, and they end up asking her, going, "What is the recipe for pot roast?" "Oh, well, you salt, pepper, garlic, some celery, some carrots, and then you add this and you add that." And then she goes, "And then I would cut the ends off, put it in the pan, put the pan in the oven." And they're like, "That's a part we don't understand. Why are we cutting the ends off the pot roast?" And they're like, she's like, "Oh, bless your hearts. I only had one pan, dear, and so the only way that I could do it to make the pot roast fit in the pan is I'd have to cut the ends off of the pot roast." So you may be doing something, right? You may be doing something wrong that was taught to you wrong on either accident or on purpose. So how many of you have ever heard one of these lies? Okay. And the bad news is you have probably been lied to and you don't even know it. All right. So you may be using volume the wrong way, but it's not your fault. You've been lied to. Think about this statement right here. A rally on low volume is bad. Anybody ever hear this statement? A rally on low volume is bad. How many times have you heard CMB say, "Well, this rally is this is a fake rally because it's went up on low volume," or, "Oh, well, this sell-off's not real because the sell-off it's predicated on a very, very, very low volume. Therefore, this is not a real sell-off." Anybody hear this BS from Bloomberg or CNBC? You know it's crap, right? Just right out of the gate, you just know it is, right? So here's the thing, like, when they say it's not real, the prices are actually real. The price actually went lower, or the price actually went higher. It's not like those prices are fake. What they're trying to tell you is like, well, it may not last, right? Now, here's the thing. Let's just think about this from the standpoint of when you want to be involved in the market and when CNBC or your broker or somebody else wants you to be involved in the market. So let's say that there's a pool, okay? Let's say there's this pool right here, and the pool is empty, and these little dots are going to signify people in the pool. Which way would you rather be? And let's say this is the start of the move, and then this is the end of the move, okay? Now, let's say you've got another pool here, all right? And then you've got a bunch more people in pool number B than you do in pool number A. So in this situation right here, all right, so which pool would you rather be in, A or B, if you wanted it to continue the move, right? If you were wanting a move to kind of continue, which one? Which one's got the better shot of continuing? So B's got way less room. Everybody, I mean, there's only so many people that you can cram in this pool, and then this pool, then a lot of people are going to jump out of the pool. Somebody's going to be left hanging on to that high tick or that high price point, right? In this situation, if you start an up move and there's more people, more room to get in on the move, then it's the start, the medium, or not even close to denial or fear yet. So this is a crowded trade right here, not a lot of potential. This here is a very uncrowded trade. You got a lot more potential to go up. This one has more potential to roll back over. So if you think about it, really a move on low volume is actually a really, really, really good thing, unless it's a V bottom or a climactic bottom where you just sell off like crazy, the price action sells really hard, and you get a volume spike, and then those are really good for reversals. We're not talking about that. We're talking about those do happen, and those are great trades if you know how to find them. They're wonderful trades. You can do them in gold, you can do them in bonds, you can do them in the E-minis, you can do them in stocks. So just think about that. Why? Who says all this stuff? You know, they say, and then you're starting to go, okay, who does say all this? They are the media, there are other traders, and there are other investors, and it just gets passed from generation to generation, from generation to generation. And my question to you is, have you ever done any volume analysis yourself? Have you ever done any volume analysis and said, okay, on the beginning of the move and then the up move, and then as the volume picks up, and then you get a huge volume move here, then it pops off and then goes lower. Have you tested any of it, right? Or have you just blindly been following what everybody else has told you? Like, did you just believe it? Did you just trust? Like, yeah, that makes sense. Like, you know, if a sell-off happens on low volume, that makes common sense that it probably won't continue. Or did you look at it and go, well, it's just starting to sell off, so there's only a few people involved in it, therefore it could be the beginning of some new trend, all right? Did you trust or did you verify what they told you? So let's talk a little bit about how volume works, all right? There are 11 different types of volume in the markets, all right? So let's go through some of these types of trades. There is when the price is up and you have high volume, that's one. There is when the price is up and you have low volume, that's number two. There is when price is sideways and volume is high, no real advantage there, right? There is when price is sideways and you have low volume. There is normal volume or equal volume where you've got the bulls and the bears are kind of just equally matched up. There is when price is down, but the volume is high. There's also when price is down and volume is low. And then there's a wide range bar. In other words, you got price that's really wide. The volatility is going crazy, but the volume is low. That's a thin trade. There's also a very wide range or very volatile trade with high volume, which is basically what we've got right now. Like yesterday, the bonds, that's the biggest volume they've ever had. You haven't had a 5-point move in the bond market since the 80s. And the CME yesterday had huge volumes in the futures markets, huge moves. And then there's a tight range with low volume, which is pretty normal. And then there's also a tight range with high volume, which is abnormal. So let's focus on the top 5 instead of focus on 11, because 11 is just too hard to deal with. So when you're looking at volume, not all volume patterns are useful to you. A lot of them are just crap. You're just like, that gives me nothing. Why am I looking at that, right? Have you ever been there and done that where you've had indicator after indicator or trading strategy and setup, and you've got so many of them, and now you're starting to focus on, all right, I just need to start paring back. And what I really need to do is focus on the stuff that's helping me and get rid of all the stuff that's kind of confusing me or making me have cross signals, okay? So let's talk about a high volume up move. That's one we're going to focus on. We're also going to focus on a high volume down move because that's important. And we're going to talk about normal or equal volume. Now, we're not really going to focus on this so much, but we're going to look at it. We're just going to notice that there's no advantage. We don't have a high move. We don't have a low move. This is just equal volume. So in other words, it means nothing. Therefore, we don't have an advantage. And then we're going to talk about low volume because that's an advantage. We're going to talk about confused volume, and this is a cool one. Confused volume means there's a discrepancy going off between the bid versus the ask and the way that the price should be going and the actual move that the price actually does go in, okay? So let's talk about what each one of these mean. I'm going to adjust my microphone here a little bit and lean in here so I can draw on this thing a little bit better. So let's talk about high volume up move. High volume down, normal volume, equal volume. So let's go through a high volume up move. So when more trades are being made at the ask, that means you have aggressive buyers. So let's just quiz everybody here. Which side do you buy on? Do you buy on side A or side B? When you're a retail trader trading electronically, where you're trading stocks, options, futures, forex, which side do you buy on? Do you buy on the bid or the ask side? A or B when you place your trade? Middle? No, not really. Yeah, so usually when you place an order to buy something, you have to pay the ask price, correct? Okay. So if we have more trades executed at the ask and the ask is being lifted, then that is going to be good for turns and trend changes and continuation. And it depends on what you are doing. Yeah. So like a lot of times there'll be a wide market, and if you put a market order out there, obviously it's going to hit the ask. You can also do a limit order. Now, let's go back to this. Let's talk about the importance of a normal volume or equal volume. Means we have no advantage whatsoever. Okay? Yeah, you have to take the ask when you're buying something, right? You can bid on something and the ask will either be lowered down to you or the ask will be pulled up higher. So when there's normal volume or equal volume, it's usually a balance act and you have absolutely no advantage there. Therefore, you don't want to place a trade there. And now let's talk about low volume. So a low volume means the edge goes to the professional and the disadvantage goes to retail. Now, I own my own futures brokerage firm. I have a seat. I am considered a professional trader. You may also be considered a professional trader if you try to make more money than you lose in the markets. You don't have to have a seat like me. You don't have to take all the exams and pass all the tests. You don't have to own a futures firm like I do. You don't have to, all right? I do it because my commissions are lower, and it makes it so that my cost of doing business is very, very minimal. So I always want to be in the advantage where it gives me an advantage and not a disadvantage. We're going to talk about low volume. You have to be very, very cautious on low volume moves because you can get some erratic moves. It's really good for turns. It's really good for tops and bottoms. Now, let's talk a little bit about confused volume. Confused volume, the edge goes to the professional and the disadvantage goes to the retail public. It's really good for trading turns, tops and bottoms, and continuations. And I'm going to show you this in just a second. So volume actually leaves some clues behind. And you've probably heard about like footprint charts, market profile. There's a very easy way. You can just use simple volume if you know how to do some basic math and program some indicators up. It's pretty easy to filter out some of this stuff. So let's talk about the price and the volume will give you clues about what to do next. It usually happens in combinations of 2 or 3. There are also repeatable price and volume patterns that you can exploit to your gain and benefit. So the volume advantage. First, you're going to start with the market trend or stage. So right now, and we'll do this live at the end of the thing, we're going to go through and grade what's going on in a lot of the index futures. We'll look at the bonds, we'll look at gold, we'll even look at some stocks. But you always want to start with the big index futures because those things kind of push everything else around. And we'll do that on live charts. Second thing you got to ask yourself is, the question is, where is the market right now? Is the market in a massive uptrend? Is it in a correction? Is it just the beginning of the correction? Are we selling off real hard? Are we going to do a dead cat bounce here? Or are we going to have some continuation? Then you got to ask yourself, are you in an uptrend, a downtrend? Are we sideways or we're basing? Like we were in an uptrend, right? And now we have broken that trend line, and now we are in the start of a new downtrend, and it's really picking up speed, and it's scaring a lot of people. Are you a trend trader or a counter trend trader? So let's take an informal poll here really quickly. What are you personally? Just answer in the chat box. Are you a trend trader or are you a counter trend trader? Let's see what we got going on here. So it looks like we got more trend trader. More trend trader. Now you can be both, right? But you can't be both all the time. You're usually slanted in one direction or the other, right? And I always make the joke like, you're not, most people are not bisexual, right? Most people are not bisexual traders, right? Like, you usually kind of head towards either trend trading or counter trend trading. You can't play both sides of the trade at the same time. It's kind of hard, unless you're doing it in sub accounts or different contract months and stuff like that. All right, so most people are trend traders. That's interesting. What is the time frame for the trade that you're about to place? Are you in this trade for a microsecond and you're going to jump in and jump out? Are you in it for a few minutes, a half an hour, 45 minutes? Are you doing a day trade where you're only going to be in it for 4 or 5 hours? Are you going to hold this thing overnight, or is this a swing trade? So what type of trader are you? Are you a day trader, a swing trader, or an investor? So we've established that most people on this webinar are trend traders. Let's see if you're a day trader, a swing trader, or an investor. Now this, you can actually be all three of these all at once. You can be in an investment of Amazon and you can scalp it intraday also. So that's not a big deal. All right, cool. Now, how much are you going to risk? The difference between a professional trader, all right, and an amateur trader or a retail trader is we always, as a professional trader, we always think risk first and reward second, okay? So always think about risk. Then you think about what's the potential reward of the trade. The major problem that a lot of retail traders have is like, all right, how much money can I make on this trade? You're like, oh, easy, Tiger. Wrong question to ask. How much money are you risking here? And what's your entire risk on this trade? Okay, that's the real question to ask. Then we'll talk about the game. All right. Anybody watch the movie The Hunt for Red October with Sean Connery and Alec Baldwin? So I'm going to teach you one of my favorite volume confirmations. All right, it's a reversal pattern, and I'm going to show you. Great movie, right? You gotta love Sean Connery. Really, really good movie. So, do you remember the scene in the movie where Alec Baldwin is trying to talk the American sub commander into not in front of him? Remember what's called a crazy Ivan? So what it is it's like this. Like, this is the Russian sub, and this is the United States sub. And what they're doing is the Russian sub will do a turn to see if anybody's following in their baffles, right? It's a loop, right? So there's actually a trade that we've coined called a crazy Ivan, where you have a crazy down move and then a crazy up move, or a crazy up move and then a crazy down move. It's a great reversal signal. And if you can pinpoint these things, they're really good for reversals or continuations. So that way you can kind of pick your turning points in the market. All right, so that's one of the trades that we're going to go over called a crazy Ivan. So here are some of the patterns that we look for. When we have red volume and green volume, so when we have bearish volume followed by bullish volume, it's called a crazy Ivan. So if red goes first, you're going to have a down move and then an up move. In most cases, it will continue to the upside, and it's usually substantial, right? The next one we're going to look at is a crazy Ivan in the opposite direction, where you have an up move followed by a down move. In this situation, the thing that you're trading usually goes substantially lower. And then we have, these are really good for turns and trend changes, okay? And they're also good for continuations, so we always wait for that third confirmation. So if this was our candlestick here, and then this was our candlestick here, let's say this one is filled in. We'll say this one's filled in. We'll say this one's blank. Whichever way that's going, you always want to wait for your third candlestick. I can't draw on that. This third candlestick to show up to let you know the confirmation of which way it's actually going. Okay? Now we're going to confirm on the price bar of the following for the confirmation of the combination. Pretty easy to do. So let's go through this. Gold volume spot trade. So right now I'm actually in the midst of teaching a course called Gold Trading Secrets. I usually only teach it once a year. So there's this trade that I teach a lot of people called a volume spot trade. What happens, let's say that you're in an uptrend in gold, then what you'll have on a 1 minute chart, you'll get a little bit of a sell-off on the intraday move like this, and then you'll get a spike in the volume. Anywhere from 1,000 contracts to 1,500 contracts on a 1 minute chart. What will happen at that point, if you're in a massive uptrend on the daily and you get a sell-off on a 1 minute bar and you spike to a low with 1,000 to 1,500 contracts, that'll be a bottom and it'll reverse and go higher. The opposite is also true, okay? So you can do that too. So it's called a a gold volume spike trade. So this is what normal volume looks like. Is anybody familiar with this one up here? I'll just do this as A right here. This is A. And then this is my custom, it's got my name on it because I did the math. Hubert Senters climactic volume indicator. You always got to call them something crazy, right? So let's go through what this looks like. So this is an old snapshot, and I'm going to show you these things in live at the end of the presentation. So I want to show you what the colors signify and what I'm actually looking for myself. So first and foremost, on the A here, you really don't see any difference, right? This all the volume is just one solid color, and that's TradeStation's built-in volume indicator. And if you use somebody different, sometimes it'll be green, sometimes it'll be green or red, just to give you a little bit more information. So here's the one that I use. So number one, you see this where it's purple or light pink? This one means heads up. There's something wrong. It means sketchy volume. It means there is weirdness going on, and you should pay attention. Okay? Red means what it should mean. Red means sell, and green means buy, like bullish and bearish. Okay? Now, a yellow bar means low volume, low volume. And then what we're looking for when we look for the Crazy Ivan trades is we want to see if we have a red and a green right beside each other. Okay? So does anybody see a Crazy Ivan here? So we're looking for, well, here's a good example, though. Let me show you this really quickly. Do you see this little up move here in the ES on the daily chart right here? You notice this little green bar right here, which tells you that's a bullish move. Now, the gray ones, the gray volume, means it's normal volume, you have no edge. Do you see this little yellow bar right here in volume? See yellow? That means this up move is happening on low volume. Now, according to CNBC, this is impossible. This is not real. So evidently, when we went from 1350 all the way up to 1400, that move didn't really happen because it happened on low volume. And we all know that CNBC would never lie to us, and that anything that you hear on television or on the internet has to be true, right? Once again, here's another low volume bar as the price increases to the high side. And then you have bullish volume, low volume, bullish volume, and then it's going, hey, all right, now heads up, be careful here. There's something weird happening. Let's see if we can find in this chart. I'm going to erase my ink and see if I can find an actual trade here that is a Crazy Ivan. What you're looking for is red next to green. All right, so here's one. So here's red, and then here's green. So you see this combination right here? That's a reversal signal right here. Reversal signal right there. So that worked out pretty good. It went higher, tested this low, and then went a little bit higher. That's a good move in the S&P. Does anybody else see one? I don't see one that's red-green. Oh, here we go, right here. Here's one that's red and then green. That one there is red-green. Went a little bit lower and then up. Red-green. Anybody seeing red-green, red-green? I think that's the only two on that chart. Okay. All right. Now, I want to show you a couple. Now, this is from the S&P. This is the snapshot that I took today from the S&P 500. This is a daily chart. And like I said, I'm going to do live charts with you, the good, the bad, the warts and all. But this is a daily chart of the ES. I just took this snapshot before I came on this webinar. Here's a perfect example of a Crazy Ivan. So you see where this is a green up candle? See where it's bullish here and then bearish? So looky right here. What happened after that combination hit? Did we go higher or lower on that combination there, on that Crazy Ivan short trade? Did prices decrease or did they go higher? Right, it went lower. It did exactly was what you thought it would do, right? You had a crazy up move and then a crazy down move, and then it said, yep, I'm going lower. Right? Now, normal volume won't show you that, okay? Now, does this thing work all the time? No, it does not, okay? Check this out. Here's one, here's a green, and here's a red. Let's go up here. Right here, there's a green. I'm going to try to do this as accurate as I can. This one said up and then said down. Did it go substantially higher or lower? Nah, not really. I mean, it dropped some. It did what it was supposed to do, but it didn't drop like this one. It's still useful information that you can use, right? And then as you can see here, here's questionable volume right here. And then you said a up move, Crazy Ivan. And then this right here is a down move from yesterday. Looks like it's going to continue. Today's we have normal volume. So I have no advantage trading today. as I did this combination and then this down day here to the downside. Today I have normal volume according to the indicator, so I have no advantage on the swing side. Let's take a look at the YM. So on the YM, did this crazy Ivan work, yes or no? It looks pretty good, doesn't it? So crazy Ivan told you to short here, here. You could have short, let's say that you were slow and you're like, okay, I'm gonna let it go to here. Still from 16,500 all the way down to 16,000 is not a bad little trade. And you're doing it based upon what volume is telling you to do, right? So that is what the indicator looks like. Now, I know I'm going to have a lot of questions like, what all does this work on? I'm going to show you. I'm going to show you on my charts in real live time too. So what does this work on? This works on stocks, options, futures, bonds. Here's a good question for you. Let's see if you're paying attention. Since it's a volume indicator, what would this not work on? What does not have, that's exactly right. What does not have volume? Forex. So it won't work on Forex, but it will work on currency futures. It will work on currency futures on the CME. It does not work on Forex because there is no volume in Forex, but you can still use it on the currency futures. It works on all time frames and tick charts. It helps you get on the turns or when there's a major move about to happen. It keeps you in good trades longer. So if you see that there is a up move, or like we're in right now, if there's a down move and we started experiencing lower volume and we had those little yellow bars, that would tell me to stay in the trade longer. I would not jump out of the trade because we had low volume. Yeah, it'll work on ETFs too. What does the green and the volume, what does the green and the red volume represent? Green represents that there's more trades going off at the ask. Red represents that there's more trades going off at the bid. And what it's doing is it's calculating that in real time with an algorithm and telling us like what's going through time and sales going, oh, okay, this is a bullish move or this is a bearish move, okay? So it's a volume divergence. That's correct. Well, my slides stop updating. Come on, PowerPoint, work with me. There we go. All right, so let's talk about how you have a new opportunity to take your trading to the next level. So here are some success stories. I don't even know who this one's from. Let's see. Oh, Mary. The course was awesome. I've taken one trade and made over $900. Do you think I'm happy? I just entered the bond trade, shorted it again, where I took profit earlier today after you made me greedy for some possible further drops. I'm happy dancing. This is the first time that I've had a successful trade during a course, and I have the hardest head in the world. You couldn't have made it simpler. Mary. Here's one from Greg. Dude, I don't know who used dudes. I guess Greg still uses the word. Thanks. You're likely the only reason I have kept at it at this trading, and now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend the next trading class. Thank you so much for all you do. And then I think here's another one from the webinar was great experience, very informative, lots of fun, but that's no surprise. All your courses are great learning opportunities and great values. So here's what I'm gonna do. I'm gonna thanks Tim, dude. I'm gonna give you the opportunity to join us also. So here's why I build indicators. It makes my life easier. It saves me time. It helps me find better trades. It makes it so I don't have to think so much. It's my form of automation. That way I can work smarter and not harder. It's basically trading done for me. So what platforms does this indicator work on? Well, the platforms that it works on will be Ameritrade, Thinkorswim, and Toss, which they're both the same company now. It'll work on TradeStation. It'll work on eSignal. It'll work on NinjaTrader. It'll work on Sierra Charts. It'll also work on Infinity IAT, which is the same thing as Sierra now. So here is who it's for. So when you invest in the indicator, you will be given a multi-charting platform license. Does everybody know what that means? All that means is that's a fancy way of saying that if you have more than one charting platform, this is a good question. Who in here has more than one charting platform? Anybody have TradeStation, Toss, eSignal? Do you have multi-charting vendors? Like I've got 6 or 8 of them, right? So there you go. Raymond's got 4. So a lot of people have multiple charting vendors, okay? So in this situation, if you have TradeStation, Thinkorswim, you can have the same indicator working on all platforms, and you don't have to invest in it again. It's all one price. So no, I don't have it for MetaTrader 4, unfortunately. Multi-computer license, everybody understands what that means. This will work on up to 3 PCs. So if you have a work PC, a laptop, and a home PC, you're covered with up to 3 PCs. So it's very easy to install. Jared and I shot videos, and it's very easy, and we have easy to follow videos for this. And we also have free installation service and tech support. If you have any problems or if you just don't like technology, you call the office, schedule a time, and we will log into your PC and install it for you. Totally free, no charge. But we ask that you first go through the video, see if you can do it yourself, and if you can't, then just call us and we'll help you out. If you run into any issues whatsoever, give us a call. We're here to help you out. All right, so who is this for? If you're serious about learning how to really use volume to find better trade entries and exits, then this indicator will help you out. If you are looking for a proven system, indicator works. If you can follow a very simple set of rules and directions, and if you know that your success is tied to you taking action and not me taking action, like I can't trade for you. I wish I could, but I can't. I can trade for myself, but I can't trade for you. All right, now who is this not for? If you believe everything that CNBC and Bloomberg tells you, this indicator most definitely is not for you. And you and I probably won't get along very well. If you're a holy, did I spell Grail wrong on this slide? That's the wonders of being dyslexic right there, ladies and gentlemen. I am dyslexic, and if you are a holy Gale seeker, then obviously this is not for you. And I guess if you're a holy Grail seeker, then I guess it's not for you either. So if you suffer from hopium, anybody in here suffer from hopium or this syndrome right here, electronic heroin syndrome, where you just have to trade? Oh my God, I have to trade. The market's moving, I have to trade. It's not for you. If you're going to be a professional, you're going to have to plan your trades out and execute those plans, okay? Don't just trade because you want to trade because you think something's going up or down, okay? Now, if you're a guru surfer, if you follow me and 42 other guys or gals in the trading business, you know, I would recommend that you stop that. Even if it's stop following me, I have no problem with it. Find 1 or 2 guys and just hunker down, right? Just find 1 or 2 guys that you like, hunker down, learn as much as you can from them, and start stealing pieces from those 1 or 2 guys and incorporating it into your own trading plan. You'll be a lot happier and you'll make a lot more money. Now, if you can't make a decision, obviously this is not for you because you're going to make a decision not to do it. If you like to make things overly complicated or difficult, then obviously for no good reason, then I'm not your guy. None of my stuff will make sense to you because I try to make things simple and efficient. It does not work on TC2000, unfortunately. They have a closed system where they don't let you build indicators. So there are 3 types of people in the room. I've actually never done a survey on this. I would love to know what type of person that you think you are. There are those that make things happen. So if you're that person, put a 1 in the chat box right now. If you're a person that makes things happen. Let's see, like there's 254 people in here. Let's see how many 1s we get. If you're a person that makes things happen, you're a go-getter, you're a type A, like you just get stuff done, right? That's that type, all right? Or there are those that watch things happen. Not a bad thing. If you're type 2, put a type 2 in there. Like, okay, I'm definitely a type 2 guy. I want to watch it first, figure it out, chew on it a little bit, and think about it again, and then I'll decide. Nothing wrong, right? Nothing wrong. Or are you the type of person that goes, what just happened? So do you make things happen, watch things happen, or go, what just happened? I'm still confused. So those are the 3 types of people that are usually in the world. Now, I don't know which one you are. Obviously, you've already told me. You know, all 3 types make the world go around. So let's take a look at your special offer. And before we look at the special offer, I want to tell you that you have absolutely 0, and I do mean 0 risk. I can't guarantee you that you'll make money in the markets, but I will guarantee that if you don't like the indicator, I will give you your money back. If you don't like the class that comes with it, I will give you all of your money back. If you do anything about it, or if you just don't like me, I'll give you your money back. So it's 100% satisfaction guaranteed. I always deliver, period. My goal is for you to always get a good return on your investment. Now, this is actually, I'm flying without a net. Has anybody in here ever bought any courses or indicators or anything from me? Has anybody ever invested in any of my stuff? If you did you have a good experience or a bad experience? Overall, I mean, did I treat you good? Did you get a good value for your money? Was it good or was it crap? Right? So that's all I'm asking. So if you have, obviously I could not log in this many people. You can see that most people are saying yes, they have, and they had a good experience. So that's cool, right? Now, obviously, if I didn't, I wouldn't ask the question, right? Because I'd be setting myself up for some severe failure here. So I really do appreciate it. Thank you for all your confidence. Thanks for your orders, and I really appreciate all the kind words. So here's your special offer. So if you go to hubertsenters.com/pub, or you can call our office at area code 859-963-3445. I'm going to give you the climactic volume indicator at a retail price. It's usually $197. I'm going to give you how to use the climactic volume indicator with an Ichimoku course, $97. It's a combo thing. I'm going to give you one follow-up webinar where you can ask any question you want about anything. And then we're also going to do a live trading session from 9:30 to 11 because that's when I really trade. Your value would normally be $488. TradingPub special offer only, $97. There is a catch, and you knew there was going to be a catch, right? It's only going to be for the first 50 people. It's only going to be for the first 50 people, okay? PUB, here we go, ping, and ping, there we go. There we go, there you go. So trading, hubertsenters.com/pub, area code 859-963-3445. You get all of that for $97, only for the first 50 people. And then in a couple weeks, we'll throw you in a follow-up webinar and a live day of trading. Any questions? Okay. Any questions? Any buying questions on this? Because I'm getting ready to go to live charts. Let's go to live charts. Let's take a look at the markets and see what's going on, and let's use this thing in real time, okay? Discard. All right. Now, I switched over. Here is what I'm going to do. I'm going to put this little sign up here, and I'm going to shrink down on Novia just a smidge. And that way, if you are going to be one of the people that get in on the indicator, then you'll be able to see the link. Does everybody see it? hubertsenters.com/pub, and then the telephone number. Is it viewable? So make sure it's viewable. Dang, there we go. All right, cool. What if we already own it? And yeah, if you already own it, you can definitely join the class. No problem whatsoever. That's no problem at all. Just just call us or email us, support@hubertsenters.com. Say, hey, I already got the indicator. I'd like to do the refresher class. That's not a problem at all, whatsoever. None at all. All right, so I hear the phone ringing. I do appreciate it. It will get on my nerves here in a minute because I hate listening to that thing ringing. Let's go through some of these trades. So let's go through first climactic volume. So this is what it looks like on a live chart. So I took that snapshot earlier on that slide. Do you see this right here? You see this sell-off? You see the, let me give you a little link here. All right, so we had an up move, normal volume, bullish move, bearish move. What's this pattern right here called? When it goes from green to red, what's it called? A crazy what? A crazy Ivan is what it's called. In this case, we're betting that prices would go lower. Now, yesterday we had really good bearish volume to the downside, and today we had normal volume. So we're probably going to follow through to the downside after we get a small bounce. Make sense? So that's the most recent signal on the S&P that I like. Here's another signal that I look at where it's confused volume or sketchy volume. It's going, hey, there's something up here. Just be careful. Yeah, it was a down move, but there were more people on the bid than the ask side today. Even though the prices went down, it was aggressive. And then you can see the next day we had a doji, and then we bounced out of there a little bit. See how that was giving you a little bit of warning? All right, let's go to the YM here. Here's another example of the YM. I'm going to zoom in here and go to the right, and then I'm going to take questions. Let's take a look at the market after I get done here. Here's a climactic volume, green up, red down, crazy Ivan trade. See where it says, hey, get short. Now we're going lower, and we're picking up steam with the bearish move to the downside. Does the indicator have to be on a candle chart? No, it doesn't. You can do it on a bar chart. I mean, here, I'll show you what. Think. There's a bar chart, right? It doesn't have to do that at all. It's doing its internal math on its own. Let me change this back to a candlestick, though, because I do prefer a candlestick. I'm a candlestick guy. I really like a candlestick. I'll move on to the next one here. Okay, let's go candlestick. Let's go on a little thicker line. I want my wick to be bright white and just a smidge thicker. There we go. All right, cool. Now, anybody wonder which way the bond is going? What is the weekly chart here showing us? So it's going, hey, heads up on this weekly. There was some weird volume here in the weekly, and then we went up, continuation, up, continuation. Normal volume's gray. Gray just means we have no advantage. Does it work on any time frame? Yeah, it does, Pete. Obviously, the lower the time frame, the less reliable. But today in the Gold Trading Secrets course, we had a sketchy or confused volume that happened on a 1 minute chart, and then boom, we just went straight up for about 3 solid points there in gold. So you can do it. It's just obviously any indicator, the lower the time frame, the more signals you're going to get, and the more false positives you're going to get. So which way is the weekly telling you that the bond market's going? No surprise why I've been trading a lot of bonds to the high side, right? What happened in March here? March, April, March. This right here, this is just normal volume. There's no advantage. Yeah, no advantage. All right, and then here's Netflix. Obviously, you can't predict what happened with Netflix, right? That's kind of hard. You know that it's earnings thing, right? But look here. You see the purple? What does purple mean? What does purple mean on the volume indicator? It means confused or something sketchy is up here. And it signaled it right here. And then the next day, what happened? You had a bearish candlestick with a bearish volume indicator, and then boom, you had a sell-off. Now, here's one where you have to be a little careful, right? Now, on this one, you do have to use some common sense on this, and I'm going to be right up front and honest with you right here. So on a day like this right here where you had a huge down move, right? Huge down move, right? Huge gap, right? And then you got an up move. This crazy Ivan may not work. Why may this crazy Ivan, why might it not work? Because this right here was an earnings gap, and then you had a straight up move. So on this one, what I would recommend is you bracket the trade and give it a confirmation of the next couple of days and go, okay, there's the high, here's the low. Yeah, so this is basically a dead cat bounce on Netflix, and there was no. This was a up move here, right? It's a bearish volume move, and then this is a bullish move because it gapped down so much. It could just be up 5 points, and that's going to give you a weird signal. So on this one, my recommendation would be that phone will not stop running. If you guys are calling and nobody's picking up the phone, if there's people here answering it, I can hear them in the background. Just leave a voicemail, and we'll get back to you just as soon as we can. So what I would do is if it went above 365, I would get long. If it went below 330, I would get short. Does that make sense? Yeah, so this one you may get a little bit of dead cat bounce on it. Okay. Now what I'm going to do here is I'll show you here one trade. Let's see here. Let's go to the cloud chart. And what I will do is I'll analyze with you Ichimoku on my charts with my climactic volume, and you throw me out some symbols and I'll show you what it looks like. So that way you can see the good, the bad, and the warts and all, okay? CHK. CHK. And then I'll also tell you, I'll tell you if there's a weird setup. So on this one, what's this look like? So it's in a massive down move, right? Massive down move. See where it closed above 1929 and it's taken volume? It told you that it was going to make a run for that 20 to 22 area right there. Not a bad little trade. And the volume told you this right here, like, hey, heads up. I know I'm in a massive move to the downside. Heads up. Reversal. Not bad, right? So ICPT. Thank you. All right, on this one, this is on a daily. It is a short below the cloud. You're starting to get some positive divergence here in volume. And you can see, once again, you had a nice little sell-off here, and it bounced here up through the turning line. It's probably going to go to 234. TLT, that's going to be easy. So TLT obviously is a long. It's above the cloud. It's taking good bullish volume. I would expect this thing to go higher. In fact, I'll be buying bonds tonight. I'll actually buy a bond here in front of you in just a second. It's going to pull back. It's probably going to pull back to 120, but it looks like it wants to go substantially higher. Okay, who's up next here? AMGN. AMGN. On AMGN, so this one's a little bit different. Okay, so it's still in the cloud, so it's an aggressive buy right here because it hasn't broken through the cloud. Now, do you see anything on this trade? Do you see anything that would have gave you a heads up that this thing might drop? Whose trade is this? Greg Mills. Do you see that? What do you see? What's the last trade you see on that thing? Okay, so we'll check this out. What do you see? Look here. There's an up move. Here's a down move. What is that trade right there? Crazy Ivan, top of the cloud, probably won't hold. Boom, drops to the bottom of the cloud. See how that works? Ivan the Terrible. That's right. Ivan the Terrible. So if you like Amgen and you want to buy it, you would buy it here with a very tight stop loss. Okay, and if it goes below the cloud, okay, and it's down there for 2 or 3 days, and this lagging line confirms, and if you get low volume or bearish volume, I mean it's going to drop like a stone to 155. Who we got up next here? We got Dale with LCI. Yeah, biotech, not drug stock. Sorry, yeah. All right, so this one is a mess. It's in the cloud. The lagging line's in the cloud. It's taking bullish volume, but there's no advantage here. It's sideways, so I can't help. Sorry. GLD, I can help. It's sideways. You should leave it alone. So GLD is in a major downtrend. You had good volume here yesterday, going both above the turning line and the standard line. On GLD, it's probably going to do the same thing that gold's going to do. It's going to go up to the bottom of the cloud and then bounce back off of it and then go lower. Gray bar. Gray bars mean normal volume, no advantage. It means it's not bullish, it's not bearish, it's just kind of like neutral. APT. All right, APT is a penny stock, but it's taking some severe volume. My advice is to be careful with these things. A lot of times, penny stocks can hurt you, so just be careful. It looks okay. Just be careful. Those things are dangerous. XRAY, XRAY. XRAY. All right, so XRAY, what's XRAY right now? Pop quiz, what is XRAY right now? What did it give you? Warning, warning, danger, Will Robinson, Crazy Ivan. And it's probably going to go lower. It's below the cloud, and it's done a Crazy Ivan. It jumped up into the overhead resistance, and now it's going to drop like a stone. That's a lower trade. Yep. That's nice. Good find. GILD. That's a good find. GILD is below the cloud, 2 days below the cloud here. Lagging line has not confirmed. You did take a little bit of bullish volume here. You've had some really good sell-off here. I would give this one Friday and Monday to see how it acts. It looks like it wants to go a little bit lower on the cloud, but it's starting to bounce with a little bit of bullish volume. But the bullish volume is not putting very much good of a dent in this bearish volume and this overhead resistance. It's better short than it is long. All righty, let's see here. Where am I at? I'm at Bank of America, BAC. BAC is a, what is BAC? BAC is a Crazy Ivan. I would buy Bank of America with a stop at the low of this right here. I would be the low of 1544. You had a down move and an up move. I would buy that with a stop of 1544. Where is my next one? BA, okay? BA. So BA, Boeing, is a Crazy Ivan, down and up, but it's below the cloud, so it's probably going to bounce to 121 to 123 and then roll back over. Goldman Sachs. Goldman Sachs is a reversal, down and then up, Crazy Ivan, long here with a stop of about 170. Target would be 180. Apple, a Citrix, CTIX. Citrix is a good, good example. Look at this. So you see how the volume, you see how the price is going up? Look at here. What do we got? What's the yellow mean? Anybody remember what yellow means? It's low volume. It means we are moving up to sideways on low volume. It is telling you that Citrix will probably go higher. Now, it's a penny stock. It's below $5, so you got to be careful, right? CNBC says impossible. I know, right? Dallas, Apple, AAPL, and then we'll do Dallas, DAL. This is a crazy Ivan. It just broke below the cloud. I wouldn't have any problems going long in here at 95 with a tight stop loss on Apple. Apple looks pretty good. You've had a couple of days of selling, and today you had a nice little crazy Ivan. I'd get Apple the benefit of the doubt until you have at least 3 or 4 candlesticks below the cloud until the lagging line confirms. Right now, you got a crazy Ivan. I would give it a shot. DAL, with this Delta Airlines, I believe, yes. DAL, bearish move below the cloud, bullish move on volume, which implies it's going to bounce up to about 35 and then roll back over. Biotech SOY, SOY? Oh, SOY. You just want S for soy. All right, SOY is a massive downtrend on the cloud. It bounced its head above the turning in the standard line. What's this right here called? Crazy Ivan, red, green. There's your reversal. Probably goes to the bottom of the cloud around 1008 and 4/8. Raymond, give me one at a time. I can't do all 3. All right, MBLY. It's too young. It hasn't been in business long enough on the trade. It looks okay though from an IPO perspective. If you go from this low to that high, I mean, you got to buy a 50% retracement. That's just good old-fashioned, buying at a discount. It looks like right now it's going up on lower volume, so it's worth a shot. I'd give it a shot. UPS is below the cloud and normal volume. Yesterday you had bullish volume. This one, it needs to hold 94. If it goes below 94, it's a short. Fibos do not work, period. Your opinion, not mine. I actually love fibs. I love fibs, but I only like the 50% retracement is the one I like. Well, there's always good discounts at 50% retracements. What's the rule? Red bar, green bar, equally up. So if you have a red bar first and then a green bar, it should go up. If you have a green bar first, then a red bar, it should go down. Yes, that is the consensus. That is the theory I'm asking you to buy into. LUV. So here's LUV. So it is bouncing off the bottom of the cloud. I would buy this with a stop of about 28 to see if it can jump back up to 34. TNA, can you give a brief explanation of the cloud? So Reggie, I have a class called what is it called? What's my Ichimoku Cloud Charting Secrets, which teaches you how to use the cloud. Now, in the course, I give you how to use the climactic volume with Ichimoku, so you'll be getting parts of the Ichimoku class in your course. Yes. Netflix in FLX. That's easy. Netflix, believe it or not, was a short here, here, and here. It spent a couple of days below the cloud here, which signaled off a short. And then here you've got a crazy Ivan, but I would not believe that crazy Ivan because it's such a huge gap. You got to let that thing trade a couple more days and see where that thing's going to settle out at. Red bar is down move on high volume. Green bar is up move on high volume. Correct. Tesla, TSLA. Tesla is below the cloud and moving lower on higher bearish volume. You've had 1, 2, 3 bars to the downside that are bearish, only 1 to the bull side. So Tesla's got some more room to the downside. I would say Tesla's probably going to 190-ish. ALNY. ALNY is a decent long. Here's a case where this thing did not work very well. So let's show that. So here was an up move. Here was a down move. Crazy Ivan should mean down, right? It did go down. It only went to the turning line and then bounced right back off of it. This is a better long than short. All right, let's take a look at a couple trades here. All right, let's see where gold's at. Gold is down 260, so I can't do anything with that. Let's take a look at bonds. Bonds, I know bonds are probably going to go higher. Okay. So let's do an 8-tick reversal. I like this trade, okay? Now, what we're going to do here in the bond market is I'm counting from this most recent high right there. You see that high at 16:30 seconds? You can call it 15 if you want. So you can say 16. What I'm going to do is I'm going to go 1, 2, 3, 4, 5, 6, 7, 8. And I'm going to buy that right there. Now, I need to set up my order right. Let me show you what I'm going to be risking. I'm going to be risking 5 ticks to make 64 ticks. Does anybody know what that math is on this trade? So I'm going to be risking $156 to potentially make 2,000. I did this trade day before yesterday and made $2,000 while I was sleeping. Okay, I'm not saying they all work out like that. I'm just telling you that's how the last one worked out. So I'm going to risk 5 ticks to make 64 ticks. So all I'm going to do is I'm going to bid long at 143 and 8/30 seconds. This one actually has nothing to do with volume because right now at 6 o'clock the volume is anemic. Let me show you what I mean. I will remove my value charts on this. I will put it back on here really quick, and on a smaller time frame, insert analysis. The bond market is very thin as we're doing this, so it won't help us out much. But I'll put it on there to show it to you. Think. So there you go. So according to volume, we're doing on a 5-minute chart. Look, see how it's all low or normal volume? There's no edge there. Just because right now we're trading in the brand new electronic open. It's only been open for an hour. So there's a bond trade you can do. So I really appreciate all the orders. Any other questions before I go, or anything else you guys want me to take a look at before I go? Is that real money, trade, or simulated? I don't trade simulation. Simulation is for chickens. I trade for a living. Everything that I do is on my real accounts. So yeah. Crude oil, okay. CRUD at CL. You can't really, if you make $1 million in demo or paper trading, it's worthless. So I try never to do it. I haven't demoed traded in 20 years probably. I've been trading for 22. On this example here, crude oil, it's got a bullish bounce. Probably going to bounce a little bit to 84.43 at 86.59 and then roll back over. Okay, that looks good to the downside. Any intraday on any instrument? Yeah, it'll work really good on intraday. You can see this is on the DAL. I always have it on the DAL on a 2-minute. Now remember, it's going to give you more false positives on a smaller time frame, but you should be able to find some reversals. Here's a crazy Ivan. Okay, here at the open, like earlier this morning, you should have been buying the open. See this little move right here? It told you get long here, moved up a little bit. Then you had a crazy Ivan, bullish, crazy Ivan. And then here you had a sketchy volume bar, a confused one. And then after that, you had a crazy Ivan to the high side right here. See this crazy Ivan? It said get long right here in this combination. Nice little move, not bad. And then after that, you didn't really have any other crazy Ivan moves. So yeah, it works. What's the lowest time frame with decent accuracy, 5, 10, 15 minutes? I mean, I use it on a 10 for the index futures on the Dow, but I've got a lot of hours on it, so I know how to filter out some of the false positives, right? A 5 would be good, but I mean, I use it on gold on a 1-minute. I use it on the Dow on a 2-minute, and it works. Yep. All right. I appreciate you guys showing up to Here is your link one more time. HubertSenters.com/pub. HubertSenters.com/pub. Make sure what you do here. Before we go, let's go through the markets really quick. I'm going to give you a couple of good trades that you can do regardless if you invest any money with me at all. So let's go through a few things. All right. So on the S&P 500, short the bounce when it happens. It's going to go lower. Same thing on the Dow. When the bounce happens, short it. It's going to go lower. That still looks great to the low side. NASDAQ also looks good lower. Short that on lower moves or on bounces higher. The Russell, oddly enough, is going to bounce to about 1104 and then roll over, okay? Look, you got a crazy Ivan here on the Russell, so the Russell's going to go to 1104. On the US, the 30-year bond, buy pullbacks on this thing. You can buy 3, 4, 5 pullbacks. Usually 3 a day is about all you want to buy. It's going to continue higher, and it'll just make you some more money. And then if you don't like our 30-year bond, you could try the 10-year note. On the 10-year note, this thing looks a lot higher. Buy that on pullbacks. You can also trade the FGBL. It's just a Euro bund trade. This thing looks great. It's going to go to 154. And then here on GC, GC's kind of in a little bit of a weird spot. You see these angles that I've got on the chart? So it's got some bullish volume, and it's going up on lower volume, which implies that this thing is going to continue to climb until it gets to the bottom of the cloud, and then it's going to give up and roll back over. So gold's got a little bit more high move coming in its near future. I just don't know if it's going to be 3 days or 21 days, and then it's going to roll back over. So be careful with that one. And then last but not least, crude oil. Crude oil, it's time for a little bit of bounce here in crude around 85. It's probably going to bounce a little bit on Friday, and then Sunday it'll start opening up and going lower and go to 75 next week. Okay? Good luck. Hope it helps. See you on the next webinar. Thank you very much.